Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about Shopify Inc., which trades under the ticker symbol SHOP on the New York Stock Exchange. This is a stock that we were talking about pre-market in the Discord that I wanted to make a play on. Ended up not getting the fills that I necessarily wanted, but my thesis for why I really like Shopify at these levels still stands, and that is largely that right now we've seen a huge drawback on the stock price based on the fact that their management team basically came out and said, hey, we believe that as the economy continues to get better, as everyone continues to go back into more of a physical retail type of space, that we anticipate there will be a shift back away from e-commerce sales. And that being said, they still reiterated that they have incredibly high growth expectations, and I think that this presented an awesome buying point for the stock to get back in, especially if you had bought at the end of March. That being said, we did see a very strong day today, and I still think that from a long-term share perspective, there is still a lot of room to run on this stock. So as you can see, Shopify trades right now at around $1,225 a share, and they are trading at incredibly high valuations. That being said, they are right at 25% off of their all-time highs, which was back here about the 1,500 mark. You can see their high on this particular day, which was the all-time high, $1,499.75. So bounced right off that $1,500 mark. And keep in mind, this is a stock that commands incredibly high valuations because their growth has been so rapid, and COVID and the pandemic expedited this to an incredible level. So what does this mean for the company going forward? Well, first off, let's talk about some of these valuations, because this is where, again, you can get scared and you can see when you have these huge drawdowns how that can affect the stock. So right now, their earnings per share growth, the trailing 12 months, because this is going to be a better representation, is up nearly 330%. So as an e-commerce platform, as more people were shopping online, they were able to not just increase their sales, but actually convert that to profitability. And this is something that I find incredibly important when we are looking at these super high growth companies, is are they having super high growth at the expense of profit? And Shop is definitely not in that case. And they're not doing it at a expense ratio, because you can see that their total revenue growth is growing at nearly 90% over the past 12 months, which is just insane. So this is what we're going to be looking at going forward, is can you continue these growth rates? Those growth rates justify a valuation of a price to sales ratio of nearly 50% and a price to earnings ratio of 450. Now, this is one of the highest price to earnings ratios in the industry, and the only time I've seen something that was similar to this is like a Tesla, which trades around 1100 PE ratio. Keep in mind that a PE ratio, the only time you're going to see that is when companies are profitable. A lot of other companies in the space right now are trading at high price to sales multiples in this particular area. So why do I like the stock? Why do I think that this is good? Well, I want to talk about some of the financial strength metrics, because when we talk about companies, I really want to highlight the fact that if the company or if the market turns, will the company survive? There's a lot of speculative companies out there. There are a lot of SPACs out there, and there are a lot of unprofitable companies out there. Right now, we have a lot of excess money in the markets. There is a lot of liquidity. Because there is a lot of liquidity, valuations have gone to all-time highs. Now, right now, there doesn't seem to be any sign of that liquidity injection slowing down or stopping. But if the Federal Reserve were to mention something along the lines of maybe tapering, then we would definitely see a huge market correction. I think in excess of 10%, potentially more, depending on how well other economies are doing. So that being said, the companies I'm investing in, especially with a sizable investment that would be required to get into Shop due to their share price being north of $1,000, it's important you understand that this company can survive even under a huge drawdown, such as we saw, nearly 30% drawdown from the all-time highs. Right now, you can see that their total debt to total capital is very low. They do not have a lot of debt, and the debt that they do have is on a very low interest rate. They did a debt offering of nearly $1 billion this past year in September of 2020. The other thing that I would highlight is they have more than capable amounts of money that they can use to cover that interest coverage ratio. So essentially they can make the minimum payments on debt if necessary. So all of the valuations are incredibly high, but their fundamentals underneath it are also very strong. Now, keep in mind, these are very, very high valuation ratios, and that makes them susceptible to huge pullbacks. One of the things that I would highlight when we talk about pullback potential is, I'll go back to the summary for this particular stock, is they only have 122 million shares, we'll call it 123 million shares outstanding. The reason why this is super important for a stock of this size and a company at north of $150 billion is the fact that this company has a very low or small float. Float being the shares outstanding. That means this stock has the capability to move if you have single buyers coming in and buying a lot. And today they did have heavier volume. You can see that up here in the top right hand corner, which means that they do have more shares being traded than average. Again, 1.5 million shares means that you're almost trading at 1% of the total shares in a single day. So you can have a lot of people come into the market and make the stock go up or down pretty easily. This is one of the things that we want to watch, because yes, the stock can run up, but that also means if you had a big buyer come in, or rather a big seller, the stock could come back down to crash down to more reasonable fundamentals. Now, I like the options plays here as well. I think options for a year out are relatively inexpensive. That being said, you will be paying thousands of dollars to say that the stock is going to move another 30%. But this is a company that is continuing to grow incredibly rapidly, and for that reason, I think that some of that potential remains. So what's the growth thesis? Why do I think that this stock may continue to grow at the rate that they have been? Well, first, I just want to highlight some of their income statement capabilities. You can see total revenue has been growing exponentially, especially if you put it on an annual basis. You can see here that the total revenue nearly grew, or we saw it right at 88% year over year from 2020 to 2019, north of $3 billion, or right at $3 billion. That translated into heavy amounts of profitability. So if we scroll down through here, you can see that their net income went to $320 million when it was negative $125 million a year prior. So again, very strong growth, and they're now in the profitability stage of the company. I'd like to see this continue. I'd like to see the stock not necessarily move at 10-20% in a single week, because I think that their earnings do need to catch up with some of their valuations. However, we'll get the opportunity to see that coming in May 5th is the expectation there. Sorry for clicking around right there. May 4th is the unconfirmed date. But we should see additional earnings there. And again, you can see that there were 4 quarters of profitability in 2020, and we anticipate that that will continue into 2021. So that's what we're going to be looking for, is can they continue to hit those lofty expectations and those big numbers, especially with Q1, generally speaking, being the slower of those approaches. Now I want to show you 2 charts that I think just further emphasize the capability of a Shopify going forward. So I've now gone over to the Fred Economic Data site. You can see right here what I've pulled up is e-commerce retail sales as a percentage of total sales. This is a metric that they started calculating in 2000, and you can see that we're now hovering between 12.5 and 15% of total sales of all shopping is done online. So this is not just Shopify, but we're inclusive of Amazon, Walmart, and other major retailers. I think that this is a huge deal because it showcases, again, the continued shift to online shopping. And then we've got one more chart for you right here. And this chart is of e-commerce retail sales in a dollar amount. And you can see that in a quarterly basis, starting with Q2 of last year, we've had 3 consecutive quarters north of $200 billion were spent online. The issue or the concern for Shopify is, can we continue to deliver and take a material percentage of this money going back and forth between hands? And I think that they have the capability to do so. So this is one of the reasons why I'm long on Shopify, is I think that this trend is going to continue, and I definitely think the dollar amount that you see on the screen is going to continue to go up, and they're poised in the perfect place to be able to take advantage of that continued growth. So this is why I'm looking long on them, and I think that the stock's going to be north of $1,500 by the end of this calendar year. I like the shares. The options are intriguing, and I'll be checking those out as well, because if they move, they definitely have the capability to do so, but I like the shares a little bit more. All that being said, thank you for your time today. I appreciate it. If you find that you have any questions, feel free to join the Discord or drop a comment down below. And if you find this content helpful, please leave a like and subscribe. Thanks. Talk to you later.